Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 22nd of December. Starting off with the VACTA, where the question is how many times the shares have to test the £1 areas as support. We've been doing that since basically the August period, and hopefully this is the last time that we'll see this. Interesting that we've got a gap higher today through the 50-day moving average, so that gives us something to trade off there. The 50-day line at 116. Also had the gap down that we had in November, so in effect we've got an island reversal. This could be the thing or the event that turns the stock around. If we can hold above the 50-day line, then we could get up to the 150, 160 area, even though obviously you can see that the main resistance here is just over £1.40, or at least in the 130s to 140s area since the summer. Moving along to another of these COVID situations, Abingdon Health, and the interest here really, I suppose, is the way that the shares have found historically, at least since August again, support in the under the 30 pence level, and then sort of rallied up towards the 50 area. There's a rough guide. At the moment, we're probably looking for the that line of resistance there from November to be broken. That is just around the 31 pence level. Obviously, if the Omicron thing fades away, then that might mean that on this occasion there's no big rally for Abingdon, but the initial target here above 31, up to the 50-day line at 37. Moving along to a stock which should have benefited from AAA's very comprehensive update yesterday. Being a shareholder in the company, here we've got this long uptrend line there up from November last year. On the asimilar chart, that's running through around the 32 pence area. Above 32 pence, we would be looking for the 50-day moving average at 38 pence, as we had back at the early part of last month. Above the 50-day line, best case scenario at the moment, up to the rising 200-day moving average at 43 pence, maybe over the next month to 6 weeks. Ideally, there's no end-of-day close back below 30 pence. And post-September support. Onto a stock that I don't think I've covered at all in the recent past, an Nexo Group. Here we've got a situation where we've been in a range, it's a rather narrow range, 125, 145, something like that. Rather illiquid stock as well, but it could be the case that with the latest broker target, £2.80, some investors may be inspired. Technically, above 125, we could hit that one-year resistance line, rather, as high as £1.55. For cautious on the shares, maybe wait for an end-of-day close or a weekly close above the 200-day moving average at £1.37 before assuming we are heading higher. On to Caspian Sunrise, which has been in a rising trend channel since back in September last year. Floor of the channel around 3 pence and the 200-day moving average. Above that, we're looking for a minimum on the upside as high as 5.5 pence, ideally over the next few weeks. Dev Clever, another recovery situation to look at. Went down towards, 25 pence, but nice reversal yesterday. Bear trap reversal back above the November support there at 27. The longer we stay above that, the greater the chance of a move back towards the mid-30s, which is basically post-October support resistance rather for the shares. But interesting to see whether that bear trap just below 25 pence marks a near-term low for the shares. They did come off the oversold area as well around RSI 30, and that has historically been a decent place for the bulls to get into the situation. Moving on to Gene Drive, and here a rocky ride over the recent past. I suppose the plus point here was that we nearly hit the July resistance line there, which was just through 80 pence. I'm not sure whether we actually hit it or not, but very, very close, very close to it, as you can see. Current situation is that we've been back towards the 50-day moving average at 30 pence, recent support at 35 or 34.5, and above that low, looking for at least the 200-day line around 51 pence over the next week or through the Christmas into New Year period, but early weekly close above the 200-day line, really opening up an 80 pence retest any time soon. Bumper update from Myler, and here we've got a situation where the shares still in that opening range, so between 2 and 3.5. The longer they stay above the 50-day moving average at 2.6, and that's probably the best sort of trigger in the near term, the better the chance we have of a retest over the next couple of weeks of the 3.4 pence peak that we had in the latter half of last month. Online blockchain, next contender. Here we can see that the shares have been sort of sideways over the recent past. Some support there at around 38 pence, which was the October-November support area. So we've got a bit of a trading point there. Above 38, looking for at least the 50 and 200-day moving average area, around 48 over the next few weeks. Just a couple of shares to go now. Good update from Pires regarding Pluto, which I think many in the market have been sitting on the edge of their seats for over the recent past. I did highlight, it's a chart which looks a bit like the asimilar chart actually, that I did highlight that long uptrend line from April last year, I think a few days ago, and that seems to have done the trick in terms of giving Pires some support. Also, the shares very oversold there on the RSI 20 area, which is what they were back in July, so that works. If you look at the last few times the shares were that oversold with the sort of the darker green color there, then you can see that that has tended to mark a rallying point. We're looking for the 200-day moving average area around 8.5, 9 pence over the next month or so, especially if we can get a decent weekly close above the 50-day moving average at 6.8 or 6.5 pence actually over the near term. Finishing off with one of the more controversial stocks around, we've made controversial perhaps, Supply Me Capital. Here, interesting that we had the what looks like an exhaustion gap down. We've plumbed the depths down to that support line there from back in August last year, bounced off that quite well. And the current view is that an end of day or a weekly close above the 50-day moving average at 0.19 could at least fill that gap up to 0.23. Best case scenario, I suppose, over the next month or so, if we can get a decent weekly close above the gap at 0.23 up towards 0.3. So down but not quite out for Supply Me, and a bit of bullish divergence there over recent days. So always worth watching those kinds of situations. That's it for me today. More updates tomorrow.